Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, March 29th, 4:41 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend and we've upgraded our long-term indicator from bearish downtrend to neutral. We'll take a look at the charts and you'll see why momentarily. As far as the other three time frames that we track and also tracking market leaders, those are all bullish slash uptrend as things have really improved over the last 2+ weeks. Market leaders looking fine. Short term, all of the moving averages on the 5 major indexes that we review each video are trending above their short term 21-day exponential moving average. Medium term 50-day moving average, they're also trending above there also. And 200-day moving average, we got the lone holdout, the NASDAQ 100. Actually, not the lone holdout. Small caps are still below, but NASDAQ 100 with its first close above the 200-day moving average, sparking our trend from bearish to neutral. And as I said, we'll take a look at the charts momentarily. As far as what just happened today, new recovery highs for the S&P 500 and, as I mentioned, the NASDAQ 100 with a key move over the 200-day moving average. Nice green numbers on the day, keyed by our G6 collection of 6 ETFs that track growth stocks, up 2.91% on the day. Has been showing some outperformance lately. We're going to take a look at all 6 G6 charts also today. S&P 500 up 1.2, NASDAQ 100 up 1.7, Dow up 1%, mid caps up 2.1, Russell up 2.7. Global 60% stock, 40% bond portfolio up 1.05% today. In-house GROTECTION up 1.08%. We're going to talk about some buys and sells that we made in-house today. So let's get into the charts and the tail of the tape. But first, let's get into the team here at Revere. You're interested in a trend following approach that follows the markets as they trend higher. It takes a little bit of our foot off the gas if we're going sideways in the market, and tap the brake if we're in a downtrend. Give us a shout. We'd love to discuss our approach with you. You can email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. Let's get to the charts here. Start off with the S&P 500. This is just really a fantastic display of strength coming off of the bottom, really keyed on 316 with the Fed. Raised interest rates, everybody concerned, oh no, interest rates are going higher. Well, it was telegraphed, and it was a by the news event. You can see up over the last 12 sessions, we've been up 10 of the 12. And a gap up today, very often a gap up after an extended move up is a sell signal. And we did try to reverse early, but strength continued to come in. We closed above 4,600, a very key level, because you can see the prior 2 highs during the last 2 rally attempts were right here below 4,600. We don't predict, but we have expectations. My expectation was for a pause here near 4,600, and the market disagreed and just continued to power higher. And we're like when you're surfing, you don't know how good the wave's going to be. You hop on your board and you ride it as long as you can. That's what we're doing. We don't know if this is going to go another day, another week, another month. But we're riding this wave as long as this wave is healthy. So let's go to the QQQ. This is the big key today, getting through the 200-day moving average. Now, coming into today, we were watching these 2 levels also on the NASDAQ 100. It was, again, the expectation was that this would be a resistance area. Let's take a look at a 5-minute chart and keep this number in mind, 368.70. So let's look at a 5-minute chart here. We had the gap up and we immediately got above that 368 area but failed right away. So the thought is, okay, the expectation was met that we were going to pause there. At this point, we took profits in our QLD, we took profits in our SOXL, and just to book some profits at a reasonable spot where we might be pausing. We found as part of our in-depth review last year that we needed to be more aggressive harvesting profits and moving into lower risk entries in other stocks, because when things are extended, they just pull back. That's what it looked for. That's what it looked like at first. Then we saw another rally and it stopped. Where was the high? 368.98. Poked its head above that key area and failed, pulled back again. Attempt number 3, 369.03, and then went sideways. So we stayed above it for about 30 minutes here, and then we started to pull back. And where did we pull back to? 369.10, holding that key area. I can draw a horizontal line here, and you can see here's where we failed earlier in the day. Here's where we pulled back to about the same spot, and that's it. We bounced off of there, and then we just continued to trend higher in the close. Fail 1, fail 2, third time's a charm, pulled back, tested it, it held, rallied higher. Extremely bullish action here on the NASDAQ 100, and then a little bit of a chop and pull back into the close, but that can be expected. So right now, NASDAQ 100 above the 200-day moving average. So what we want to watch is that tomorrow, one of the key things we're going to be watching is a pullback into that 368.70 area. Now, it doesn't mean if you get to 368.69 that you set a stop and sell or short or anything like that. There's always like a range of maybe 0.5% to 1%. You got to give things a little bit of time to breathe. And that's something to be very cognizant of when you're setting stops. I often see people say stop is low of the day. Well, everybody's stop is 1 penny the low of the day. Don't be the guy that gets taken out along with everybody else. You got to give it some room. But anyway, that's one of the key areas that we'll be watching for tomorrow on a pullback. This has been an extremely strong run up across all of the indexes. And like I said, I don't know if it's a day, a week, a month, or a year when this uptrend will stop. It'll stop at some point. At that point, we will wrap up profits, cut losses quicker, and follow the way the wind blows. So NASDAQ 100, big move for the bulls today, something we definitely were looking for, and we'll see what tomorrow brings. Let's go to the Dow Jones Industrial Average. Also above the 200-day moving average, another one for the bulls there. So we'll also be watching today's lows when the Dow pulls back to see if it can hold the 200-day moving average. MDY, gap above, closed near the top of the range, clearing all of this resistance going back to middle of January. Nice move for mid caps. And finally, small caps, IWM. The laggard again, but gapped up, closed near. Anytime you gap up and close near the high of the day, that's good stuff. Now, I also want to mention one of the things for my expectation was for that possible pause in the NASDAQ 100 and in the S&P 500. However, note how we've really been pulling back over the last week in small caps and also in mid caps. It wasn't on a runaway straight up the way the SPY and the NASDAQ 100 were. So they played some catching up today, as you can see when we point to the numbers over here, how mid caps and small caps did very well. But even better than that, let's take a look at the 6 components of our G6 growth index. And this is what gave us some confidence to add to the more growthy area of the market today. We had our eye on a couple of things. Once we took some risk off with the initial 2 rejections of the NASDAQ 100 into the 200-day moving average, We kept our eye out for some other scenarios and some other low risk entries. Seeing this IWO act like this and really hold the strength all day, clearing all of this resistance going back 2 months. This was a big feather in the cap for our type of investing. Could turn around and fail tomorrow, but this was a very nice flag that was put in, and it's nice when it clears it all in one day. Above average volume too. There was below average volume on the pullback. It rode the 50-day moving average on the pullback, so it was getting appropriate support. Ran into the 21-day yesterday, bounced off of it, and then the big gap up today, giving us the green light to add some risk. You know, I've been talking about how we want to finance our risk with profits, and that's what we've been doing as profits continue to grow since we re-entered the market after the 314 bottom. So this is the first IWO. Let's go to the next component, FFTY. This was the weakest on the day. This is also the most actively managed, but also making a new high above the 8, above the 21, above the 50. Yes, still below the 200, but they pretty much all are because of the 3 bears in growth, small and mid growth stocks that we've experienced since the past year. Maybe they're going to play catch up now, and if they do, we're going to take advantage of it. QQQJ. Take a look at this one, another flag, another gap up into this 30, above the 21, above the 50, just what we want to see. PDP, number 4, clearing its flag, big gap up, held the strength all day, giving us confidence, not guessing, going off of facts. Art K, riding this 21, showing a little bit of relative strength over the last weeks, move above the declining 50-day moving average. Great news today for Art K. This has been just beaten down and has now made a 40% move over the last 2+ weeks. And finally, MDYG, our last component, was already above the 50-day moving average, but cleared all this resistance coming into the 200-day moving average. Relative to the 200-day moving average, this is the strongest of the 6. So definitely some good news there. Let's go back to the S&P 500. Let's bring up the tail of the tape. A lot of this we've been over for a while. Nothing has really changed. The put call, the headwinds, VIX continues to come down. Big move down. It's under 20 now. And we're sticking with our bull case, which was the 316 follow-through day, S&P 500 getting above the key moving averages, the 21, the 50, and the 200, joined by the NASDAQ 100 today. Big news this morning, and this was a very interesting trading day. The markets gapped up by about 1%, but hidden within that, all of the cyclicals and commodity stocks got absolutely crushed at the open today. And if you were just focusing on those stocks, you probably were down 3, 4, 5% in your portfolio. The only 2 we had left were 2 oil stocks. And Sedge. Sedge acts like oil because it's often acts like oil. It's a solar stock, but so we were underperforming early in the day. But as those stocks really put in bottoms pretty quickly within the first 15 minutes, and then they started rallying. So we had a market gap up and a cyclical commodity stock gap down. And the reason for that is that Russia talking about pulling back some forces as peace talks continue to progress. So quite a day today. So as I mentioned, coming in, today's question was, can NASDAQ 100 break above the 200-day moving average? Third time was a charm intraday. I talked about the intraday action today. We had that gap down, rally, fade, rally, trend up, and then chop into the close. All in all, a good day for the bulls. Some notes today. Bros, which we had a 3% position in and added to today, huge volume move coming in at 12.15, and again telegraphed by the IWO, gave us the confidence to add to it, as well as a couple of other positions. And then again, cyclical and commodity stocks bounced well off their lows. CKY, those are the 3 spider sectors that are tech heavy. They outperformed today. Builders outperformed. XLRE, real estate outperformed. GDX, weak early but finished green. And then the fertilizers, commodities, oils, gold and silver, defense stocks, and base metals were the laggards on the day. So I talked about selling the QLD and the SOXL. As energy bounced Let's go to NRGU here. As energy stocks bounced, a lot of them off their 21-day moving average. NRGU was one of them. Very good low risk entry here. We saw all of them really in unison bouncing off their lows of the day, so we bought that. We also, these are the three growth names that we added today. First of all, let's go to Bros. Great day today. We've been waiting for this for a while. The volume patterns were there. We ran into resistance after a nice move up last week. We pulled back on lighter volume right to the 21-day where we bounced, and then was having a great morning, pulled back, and then 12:15. Let's take a look at a 5-minute chart on this, and you can see really started here right around 12:15, broke above the resistance that it had been set early in the day. So here's the strength early, the weakness, come up, go sideways for a little bit, and then just almost a mini cup and handle, broke higher, pulled back, tested the top of the cup, held on lighter volume. I mean, these charts on any time frame can look for basically the same things. And then look at the big blue volume bars all throughout the afternoon. Peaked about 14%, 15% up on the day, and then some profit taking into the close. But a great day for Bros, good day for growth stocks, as I did show those 6 charts of the G6. So let's go back to the tail of the tape. The other 2 that we added today, one was GFS. I identified 5 growth leaders. Bros and GFS were 2 of them. Very nice consolidation here right near the high, really putting in a handle after it formed the cup. When it pulled back along with the market during the day and then bounced at this 70 area, good spot to add to it as we were getting the signals from the rest of the market that the situation seemed right. And also net, which is has really been acting well lately. This may be one of the rare stocks that pulls back 65% and reasserts itself, but this has made a very strong move from 80 all the way up to 130 over the last 2 weeks. A little bit extended, that's why we took a smaller position in it, 1.5% to 2%. But it did get above this key 200-day moving average after battling with it quite a bit during the day. That's the 129 area. Let's take a look at a 5-minute chart here. Here it battled all around this 130 to 128 area all throughout the day, but finished right around 130, which is about where we got in. So we're basically flat on this, but this is set up nice. If you know the story, you know the importance of net to security and the backbone of the internet. So definitely one that we had our eye on if it could right itself, which it appeared to today. So bottom line for today, impressive strength continues as the NASDAQ 100 broke above its 200-day moving average. Let's take a look at a couple other individual names before we wrap it up. CF, let's take a look at some of these commodity and cyclical stocks that got devastated early, but again, you see them close well off of their lows. We sold this into strength last week, haven't re-entered it yet. It's still below the 2 points where we sold it, but very nice, very clearly a leading stock. Fertilizers, if you've been reading anything about the possible food shortages being added to by Russia and Ukraine, fertilizer stocks have been acting extremely well. Let's take a look at a couple other ones. MOS, another one gapped down but finished near the high of the day. NTR, another one gapped down, undercut and recovered the 21-day. So the same type of signature for all of them. I mentioned gold stocks. They started out with a big gap down, undercut and reclaimed the 21-day. This is very impressive, so they didn't give up. I mentioned all the oil stocks, big gap down in oil, USO, but reclaimed it. I showed NRGU here. XOP is the Explorers, barely up on the day, but again, finishing well off the lows. Really the service stocks, OIH, bounced off their 21 and had the best recovery during the day. There are several big oil service stocks. We own CVX, that was still down on the day, but it did bounce off of its 21. We also still own Halliburton, which had a big gap down, but that's the type of candle you want to see when you back down, undercut, and then recover your 21-day moving average. Some other holdings that we have in-house, NVIDIA, holding tight and strong near the top of its range. Costco didn't do a whole lot today. This is just continues to chug higher. Big support at 550 and holding its breakout. Nucor is a steel stock. All the steel stocks gapped down too, but again, same situation, well off the lows of the day. So we had steels, we had oils, we had fertilizers, we had gold. All of those types of stocks gapped down, but finished well off their lows for the day, added all up along with the strength in growth stocks. And it was a very positive day for the market. And that's where we're going to leave it. So, as always, love to hear from you. Email don@revereasset.com, phone 855-REAL-WEALTH. Let's wrap up Tuesday, 3/29. This is Don Vandenbord, just giving you the facts, no opinions, just reviewing what happened in the market, not what we think is going to happen, not what we hope is going to happen, not calling tops, not calling bottoms, just watching what's happened in the market, reacting accordingly with a plan, regardless of which way the market goes. Thanks for listening and have a great day.